Greetings. On behalf of Penalton Forex Academy, I would like to welcome you to this video today. We're going to talk about trend lines. Do they work? Is a system based on trend lines actually worth it? How fairly does the market actually respect this type of drawings that we make on our chart? This is what we are going to discuss today in this brief video today. Let's talk about trend lines. Trend lines are supposed to be born at a pivot point, right over here. And of course, the system is based on having the trader, in this case, that it's a downtrend trend line. Every time that the price reaches the trend line, we're supposed, in this case, to put sell orders, and well, that way we are going to make a really nice profit. Now, let's use this replay tool over here and see how the price is working. You see the price action, it goes way down, comes back up to our trend line, goes back down again, up and down. Here we go. And now I would like to draw your attention to something really interesting over here. Now, let's say, sorry about that. Let's say that over here, for some reason, we missed this this sell order over here, right? Let's say that we missed it, and well, over here we have another re-entry to another sell, and of course there are a lot of plenty of sweet pips that we are not going to be able to take. We're talking about more than 100 pips over here, right? More than 100 pips that we're not going to be able to take because, well, this here the price didn't actually reach our trend line. So what about that? We're going to miss some really nice entries to operations, right? And which kind of sucks actually. Now, this is a nice scenario because here, well, I may have not taken this sell order, of course, but I didn't lose any money. I mean, if I didn't go into the market, didn't get stopped, well, of course, I didn't lose any money. But I am not making a profit, but well, I am not losing just about anything, right? Now let's continue the replay of the price, and there we see another another opportunity that we have missed because, of course, we are only trading every time that the price reaches our trend line. And now I would like to draw your attention to another scenario and something else that retail traders are taught. Every single retail trader out there is taught to, of course, once the price reaches the trend line, we're going to sell. And on the other hand, every time the price breaks the trend line and retests, it's a signal for us to input a buy order and take a long position. And of course, it is very, very possible, just as it happened over here, that we are going to get stopped by the market. Retail traders call this a fake out or a false breakout. And well, it's just another way of saying that things didn't go out as planned, right? And afterwards, the market, oh, look, here we have the entry actually. No, here, okay. Here, we could have had a nice entry for a long position and a really nice profit. But of course, we missed it because we got stopped right around here, right? Okay, Now, let's talk a little bit about this. Clearly, the market doesn't care. The market couldn't care less about what you draw in your chart, right? I mean, market structure, of course, here is everything and more than market structure. We would talk about liquidity, right? Um, Forex is an environment created for banks and for big institutions that, of course, are always looking for liquidity. So they, of course, drive the price towards the places where they know that liquidity can be found. Now, um, more about this later. I talked to you earlier about missing this opportunity and also this one over here. And let's say that, let's talk about this one over here too, right? Um, it would have been really nice if we could have gotten into them, but well, we missed them because of the reasons that I just mentioned earlier. Um, our system, our trend line based system, simply doesn't take into consideration those opportunities. Now, is there a way that we could have taken advantage of not only those opportunities, but also avoided this stoppage right over here? Well, yes, of course. And here we would be talking about precisely our methodology, our system that we'll teach at Panettone Forex Academy, which is the interbank price delivery algorithm methodology. It is a mistake to trade based only on trend lines. It's a big mistake because, of course, these systems, this methodology is taught for free. You can find just about thousands of videos talking about how to draw trend lines and support and resistance levels. And well, it just doesn't, I mean, doesn't actually work because, as I mentioned earlier, the market doesn't care about what you draw in your charts, right? Now, what does the market care about? The market cares about liquidity levels, and this liquidity is always found in order blocks. Now, you may have already watched some of our previous videos talking about bearish blocks and bullish order blocks, and here we are going to well, put them a little bit into use just to solve this minor problem. Now, let's say that I would have liked to take this order over here, this cell. It's really nice. It's very well. Let's just measure it. Let's see how many pips I could have gotten. I could have gotten just about here, 90 pips. 90 pips going to my previous low over here, 72 pips. 72 pips is a really nice profit, and well, of course, I want it. So I want it, and the trend line based system simply doesn't deliver it for me. What does order books? Now, let's. You may have already watched this video. The link to our the rest of our videos is going to be in the description of this video, of course. And here we can see really nice. If we draw this bearish block, we can of course have a really nice short position. This short position could have. Let's talk about having it in the 50% of the bearish order block, right over here. Okay, really nice. My stop loss would have been 20 pips, less than 20 pips, and as I mentioned earlier, I would have taken some 60 pips over here. Okay, let's talk about 20 pip drawdown and 60 pip take profit, which is a 1 to 3 risk to reward ratio. which is really, really nice, really lovely, right? Okay, now that's just to talk about the first example. So I will just leave it over there for future reference, all right? And eventually it got to almost 80 pips, but let's just say for the sake of our video that we are going to take only that order, okay? Good. Now, let's talk about taking this for the here over. Okay. Let's talk about taking this long position, right? It's well, I am not even going to count how many pips there are, but as I mentioned earlier, it's all about the order blocks, right? It's all about the order blocks. Here, I would have taken maybe this this right over here. Perfect. That's beautiful. Now let's see here. Okay, I'm going to take just the two. All right, the two last candles. There I have a bullish block, and of course this bullish block gives me a really, really small drawdown with a, we're going to take a long position. This long position is going to be, we can take only about 14 pips stop loss. And well, here up to this high, I would like to take 74, 70, let's talk about 80 pips, all right? 80 pips, it's a 1 to 5.77 risk to reward ratio. And well, that's just to make an example. So as if we could make a summary of these examples, the market doesn't care about what you draw in your charts. It cares about liquidity, and liquidity is found in order blocks. And order blocks are based on the theory of the interbank price delivery algorithm. Now, hey, but what about these points precisely where we're going to have we had some really nice trades? Well, the explanation would be, of course, order blocks, right? So let's talk about this point right over here. This point right over here can be explained perfectly by a really nice order block that we are going to find. Let's see, in the 50%. Oh, here we go. This is what we call here. All right, here. This is what we call a breaker. And now this breaker allows us to take this short position right over here. Almost no drawdown, of course. Let's put it our target over here. Our stop loss just out of our order block. And here we're talking about 1 to 6.69 risk to reward ratio, right? Okay, very nice. Another one, just one more to finish our explanation. Well, let's talk about this point right over here. All right, talking about this point right over here, we would have a really nice bearish block. Sorry about that. We would have a really nice bearish block right around here. All right, it's here you can see it's right to the pip. I mean, this is precision at its best, right? Here we would have taken a short position, all right, from the 50% of the order block just to the previous low, right over here. Our stop loss would have been just out of the bearish block, and it would be a 16 stop loss pip, 16 pip stop loss, and 94 pip take profit. A nice 1 to 5 risk to reward ratio. So, well, here is just the explanation to those really nice entries. Well, we could say that coincidence is the trend, the trend line. It's just coincidence that the trend line is touched by the price. I mean, market of course doesn't care about that. I just showed you through the order blocks how the price and the market actually works. And well, we hope to see you next time in our next video. I hope this is helpful. And now I would like to talk to you just a little bit about the interbank price delivery algorithm. What's the thing with this methodology? It's not that it's the only methodology that there is out there. There are plenty of methodologies, of course, out there, lots of systems. And well, you are going to be you are able to find them all over the place. Now, what's the thing with the interbank price delivery algorithm, with our methodology, our system? This system is a system that allows you to grow small accounts rather quickly. With a very well. I just showed you the level of accuracy that we use and that we like to teach our students. And well, I hope that you can find this helpful. Well, of course, I hope that this is interesting for you. We will leave the description to in the description to this video. We are going to leave you our contact details, and I hope that well, you have a very nice day, and see you next time.